Hello everyone, welcome to Finance by Avisha and Arpita. In today's video, we'll see the introduction to fundamental analysis. Fundamental analysis is a holistic approach to study a business. When an investor wishes to invest in a business for a long period, say for 3 to 5 years, it becomes essential to understand the business for various perspectives. It is crucial for an investor to separate the daily short term noise in the stock price and concentrate on the underlying business performance. Over the long term, a fundamentally strong company's stock price tend to approach, thereby creating wealth for its investors. We have many such examples in the Indian market. To name a few, one can think of companies such as Infosys Limited, TCS Limited, Page Industries, Aisha Motors, Nestle India, etc. Each of these companies have delivered an average of over 20% compounded annually CAGR year on year for over 10 years. At a 20% CAGR, the investor would double his money in roughly about 3.5 years. To give you a perspective, higher the CAGR, faster is the wealth creation process. Some companies such as Bosch India Limited has delivered close to 30% CAGR. Therefore, we can imagine the magnitude and the speed at which wealth is created if you could invest in fundamentally strong companies. Here is a long term chart of Bosch. This is the chart of Bosch India, Aisha Motor, and TCS Limited that can set you thinking about long term wealth creation. Do remember, these are just three examples amongst the many that you can find in Indian markets. These are the three charts of different companies. At this point, you can think that I am biased as I am selectively posing charts that look impressive. You may wonder how the long term chart of the companies such as Suzlon Energy, you can see here, Suzlon Energy, Reliance Power, and Sterling Biotech may look. Well, here are long-term chart of these companies. These are just three examples of the wealth destructors amongst the many you can find in Indian markets. The trick has always been to separate the investment grade companies which create wealth from the companies that destroy wealth. All investment grade companies have a few attributes that set them apart. Likewise, all wealth destroyers have a few common traits which are clearly visible to the investors. Fundamental analysis is the technique that gives you the convention to invest for long term by helping you identifying these attribute of wealth creating companies. Now, can I be a fundamental analyst? Of course, you can be one. It is common misconception that only chartered accountants and professionals from commerce background can be the good fundamental analyst. This is not true at all. A fundamental analyst adds 2 and 2 to ensure its sum to 4. To become a fundamental analyst, you will need a few basic skills: understanding the basic financial statement, understanding business concerning the industry in which it operates, basic arithmetic operations such as addition, subtraction, division, and multiplication. So, this module objective on fundamental analysis is to ensure that you gain first two skill sets. I am happy with technical analysis, so why bother about fundamental analysis? Technical analysis help you garner quick short-term returns. It helps you time the market for a better entry and exit. However, technical analysis is not an effective approach to create wealth. Wealth is created by making intelligent long-term investment. However, both technical analysis and fundamental analysis must coexist in the basically the market strategy. To give you a perspective, let us reproduce the chart of Eicher Motors. So, let us say a market participants identifying Eicher Motors as a fundamentally strong stock to invest and therefore invest his money in the stock in 2006. You can see the stock made a relatively negligible move from 2006 and 2010. The real move in Eicher Motor started only after 2010. This means fundamental analysis based investment in Eicher Motors did not give the investor any meaningful return between 2006 and 2010. The market participant would have been better off taking short term trade during this time. Technical analysis helps the investors in taking short term trading bets. Hence, both technical analysis and fundamental analysis should coexist as part of your market strategy. In fact, this leads us to an important capital allocation strategy called the core satellite strategy. Let us say a market participant has a corpus of 5 lakh rupees. This corpus can be split into two unequal proportion. For example, the split can be basically the can be 60 to 40. So 60% of the capital is 3 lakh can be invested for long term in fundamentally strong companies. The 60% of the investment makes up the core of the portfolio. You can expect the core portfolio to grow at about 12 to 15% year on year basis. The balance 40% of the amount, which is 2 lakhs, can be utilized to for active short term trading use. Technical analysis technique on equity, futures, and option. The satellite portfolio can be expected to yield at least 10% and 12% absolute return every year. So, now coming to the tools of fundamental analysis. The tools required for fundamental analysis are fundamental, most of which are available for free. Especially, you would need the following: the company's annual report. All the information you need for fundamental analysis is available in the annual report. You can download the annual report from the company's website for free. Industry related data. You will need industry data to see how the company under consideration is performing considering the industry. Basic data is available for free and is usually published in industry association website. Now, access to the news. Daily news helps you stay updated on the latest developments in the industry and the company you are invested in. A good company, a good newspaper, business newspaper, or service such as Google Alert can help you stay abreast of the latest news. MS Excel. Although not free, MS Excel can be extremely helpful in fundamental calculation. With just basically these four tools, you can develop a fundamental analysis that can rival institutional research. You can believe when I say that you don't need any other tool to do good fundamental analysis. In fact, even a in at the institutional level, the objective is to keep the research simple and logical. So the key takeaways from this chapter are: the fundamental analysis is used to make long term investment. Investment in a company with good fundamental creates wealth. Using fundamental analysis, one can separate a investment grade company from a junk company. All investment grade companies exhibit basically a few common traits. Likewise, all junk companies exhibit common traits. Fundamental analysis helps the analyst identify these traits. Both technical analysis and fundamental analysis should coexist as part of your market strategy. To become a fundamental analysis, one does not require any special skill. Common sense, basic mathematics, and a bit of business sense are all that is required. A core, basically, satellite approach to capital investment is a prudent market strategy. The tool required for fundamental analysis are generally fundamental. Most of these tools are available for free. That's about the introduction to the fundamental analysis. We will understand the mindset of an investor in the next video. So stay tuned for that video too. Thanks for watching. If you like the video, hit the like button and subscribe to the channel for more such videos. Thanks for watching. Bye bye.